Well, I think it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like, watch out for margin debt. I would really advise people to not have margin debt in a volatile stock market. And, from a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market. Like Brett Johnson, who was the CFO of SpaceX, was at Broadcom in 2000. And he said that, and that's a good company making good products. And he said from peak to trough, I think in less than 12 months, Broadcom went down 97%. So like, even if you had a small margin loan there, you got crushed. It subsequently recovered, and I think, to much higher levels. But, if there's like mass panic in the stock market, then you got to really be careful about margin debt. But I mean, this is just, as we know, the economy is cyclic and somewhat overdue for a recession. And my best guess is that, we have sort of stormy times for a year to a year and a half, and then things start to, dawn breaks roughly in Q2 24, if I were to guess. That's like my best guess. Recessions don't, like booms don't last forever, but neither do recessions.
And it's a 14-year boom, so a 6-quarter recession seems like that might actually balance out. The last time it was, 4 or 5 quarters? So it's not easy.
Interest rates have been rising. That increased the cost to the consumer of getting loans, things like that. We've had a stock market correction, really a crash in a lot of growth stocks, software stocks. From where you sit and the data that you see, where do you think the economy is headed right now? Do you think we're in a recession, or is it just a risk? How do you assess our current economic situation?
Well, predicting macroeconomics is always difficult, and one should assign probabilities to these things. But ironically, I did last year, people asked me what I think about the economy. I said, well, I think we might enter a recession in approximately spring of 2022. Now, the thing is that recessions are not necessarily a bad thing. I've now been through a few of them. And what tends to happen is if you have a boom that goes on for too long, you get misallocation of capital. It starts raining money on fools, basically. It's like any dumb thing gets money. And I'm sure you've seen a few of those. So at some point it gets just out of control, and you just have a misallocation of human capital where people are doing things that are silly and not useful to their fellow human beings. And then those companies, there needs to be sort of an economic enema, if you will, to have everyone sort of shift uncomfortably in their seats. But eventually the economic enema does its job. It clears out the pipes, if you will.
Yes.
And sort of the bullshit companies go bankrupt, and the ones that are doing useful products are prosperous. And but there's certainly a lesson here that if one is making useful product and has a company that makes sense, make sure you're not running things too close to the edge from a capital standpoint, that you've got some capital reserves to last through irrational times. Because in the past, when there's been a recession, it has gone, it's amazing, it's flipped like a light switch. I mean, David, do you remember this when from the PayPal, ex-PayPal days, when we raised $100 million in March of 2000, and we had, the demand was so high, we had people like VCs, like just literally without even a term sheet, wiring money into our account. They literally were like sleuth out our bank account number and wire money in. And we're like, where'd this come from? And it's like,
Want to trade and invest in global markets with ease? Build your portfolio with a one-stop investment app. Moomoo offers access to stocks, ETFs, options, and more. Click the link in the description and make a deposit to claim your free stocks.
So it was like there was literally fire hosing money in March of 2000. And then in April 2000, the market went into free fall, and it went from raising money was trivial to even good companies could not raise money in a month. So it's just important to bear in mind that, PayPal almost went bankrupt in 2000. We came close, but thankfully we'd raised that $100 million in March 2000, without which we would be in game over, basically. And we kind of saw it coming. So it's like we got the X-Confinity merger done in like 3 weeks and raised $100 million. Because we were like, we see this coming to an end pretty soon. And then a month later, it was like, a nightmare, basically. And make sure if you're a healthy company, you got some capital to get through things. And then watch your costs. And if it is a recession, which more likely than not, it is a recession. I'm not saying it is, but it probably is. Then just watch your cash flow and get positive cash flow as soon as you can. So I think we probably are in a recession, and that recession will get worse. But these things pass, and then there will be boom times again. So it'll probably be some tough going for, I don't know, a year. Maybe 12 to 18 months is usually the amount of time that it takes for a correction to happen. The obvious reason for inflation is that the government printed a zillion amount of more money than it had, obviously. It's like the government can't just, have issued checks far in excess of revenue without there being inflation, velocity of money held constant. So unless there's something would change with velocity of money, but if the federal government writes checks, they never bounce. So that is effectively creation of more dollars. And if there are more dollars created, then the increase in the goods and services output of the economy, then you have inflation. Again, velocity of money held constant. But this is very basic. This is not like, super complicated. And if the government could just issue massive amounts of money and deficits didn't matter, then why don't we just make the deficit 100 times bigger? Okay. Yeah, and the answer is you can't, because it will basically turn the dollar into something that is worthless. And various countries have tried this experiment multiple times. It's not like, oh, I wonder what happens if this is done. Yeah. Have you seen Venezuela? Like the poor people of Venezuela have been just run roughshod by their government. And so obviously you can't simply create money. The true economy is very important. Like the true economy is the output of goods and services. It's not money. It's literally what is the output of goods and services. Money is simply a way for us to, or anything that you call money, is a way for us to conveniently exchange goods and services without having to engage in barter, and also to shift obligations in time. Those are the two reasons that you have money, this thing called money. It's really it's a database. Money is an information system for labor allocation and for exchange of goods and services and for translating in time. And the quality of that information is a function of, it's like you can apply information theory to money. And I think it helps explain why one money system or why one action is better than another. And so just like an internet connection, you'd want something that's high bandwidth, low latency and jitter, and is not dropping packets, does not have a lot of errors in the system. And the same is true of money. And really, like you said, what did PayPal really do? That it helped improve the bandwidth, the speed at which money could move. Instead of mailing checks back and forth, which amazingly, that was what people did in 2000, you could now do real-time exchange of money, and now you could ship your goods immediately instead of mailing a check and waiting for the bank to clear the check. So the ultimate thing that with PayPal, if it sort of was in the X.com, less sort of niche payments and more sort of broad financial, would be to simply disintermediate all the heterogeneous COBOL databases out there running on mainframes doing batch processing, and have a single real-time system that was secure and not batch processing. So it would just be, from an information standpoint, more efficient. And eventually all the batch processing COBOL mainframes operated by the banks would cease to exist. I sure hope we don't even need a war. There will be certainly, an economic competition that I think will blow people away when they realize just how competitive they have to be competitive with companies in China. It's very difficult. Tesla is competitive because we have an awesome team in China. Tesla is sort of pretty far out there in terms of work ethic anywhere in the world. So the Tesla work ethic in the US, I think, is substantially greater than any other car company or any large manufacturing company that I'm aware of. Look, I think the point of a company is to produce useful products and services for your fellow human beings. It is not, some political gathering place or a thing where that's the point of a company. So I'd say it's, politics and other stuff let's not lose sight of why companies should exist.
I have been guiding our portfolio company CEOs to be at cash flow break even now or extend runway to Q1 2025. And they're
25.
Yes, because Elon and I are kind of roughly in the same place we have been for a while, which is mid 24 is when the recession ends, and you need to give yourself 2 to 3 quarters of buffer so that you can go and raise a round, which takes 1/4 to 2 quarters. And once you start to get escape velocity out of a recession, having money through end of Q1 2025, I think, is a minimum requirement. And, of the companies that I think were the most precariously positioned, there was 5 of them that got their acts together and really did it. But these are all CEOs of companies that, if you said them, you would know some of them.
Yeah, I said Stan Druckenmiller. He, as you recall, last year he predicted that inflation would be lasting. This was the spring of 2021 when transitory was the word of the day. This year, he predicted the bear market rally we had in July and August. And I remember back at the Coatue Summit in May, or around that time, he was interviewed and he basically was saying that as soon as there was a bear market rally over the summer, that he would then put a short position on. I don't know if he actually did that, but he said he was going to do that. And then it turns out that the summer rally that we had was a dead cat bounce. So he was right about that. And now he is predicting a hard landing in 2023 with a deeper recession than many expect. So sadly, I suspect he may be right yet again.
Friedberg, best investor for you, 2022.
Same. I had Druckenmiller. I indicated that he's been doing interviews pretty much every quarter for the last 2 years, and he's been pounding the table, telling everyone what's going to happen, and it all happened. And he even told people the trades in mid-2021. He said he was short long-dated treasuries, and he was long commodities. And if you had put those two trades on at that time and held them to today, you would have made a fortune. And so I think he's extraordinary in his ability to kind of see macro in a way that others don't, but also to take extremely brave action with his portfolio. He's renowned for how big the bets are that he makes and how quickly he can change his mind when he's wrong and make another big bet and still get himself out of the hole. He's incredible. So I definitely give it to Stanley Druckenmiller this year.
On a dollar basis, the biggest business loser of this year was big tech. And I think that you saw three things happen, which I think are important for the future. The first was it was the most crowded trade, both by professional money managers as well as retail. And that fever finally broke in the second half of this year. And now going into these last few weeks, you're seeing a lot of panicked selling to cover losses and other things. So I think that number one, that happened. Number two, regulators basically said, we're going to go after these guys every single which way we can. Mm-hmm. And then number three, I think it started to change the innovation cycle where people now actually believe that they can't outspend because folks won't tolerate it. And the things that they're spending their money on seem kind of foolish. And so I think, big tech is probably not discussed enough, but it was a huge loser for this year.
Friedberg, who is your biggest business loser for 2022?
I mean, this one's just a simple FTX. I mean, that was such an incredible revelation of the scale of the scam and the fraud and the craziness that went on. And I think what was interesting about FTX is it had implications not just for crypto and not just for kind of offshore regulatory and not just for fraud, but also for the investors. We had a whole debate about whether the press and journalists failed to kind of, appropriately investigate this guy rather than give him accolades because he said the right things, which he said he did over IM. And investors failed to do relevant amounts of due diligence or form a board and have proper governance over him because they wanted to be part of the hot new thing and everyone had capital to deploy. And I think what was interesting about the FTX failure is it wasn't just a failure due to fraud, but it revealed so many parts of kind of, systemic laziness and systemic kind of blind eye and systemic bias that allowed and enabled this to happen. It was really a revealing kind of failure. And that's why I kind of gave it the award.
Mr. David Sachs, who is your biggest business loser of 2022?
Well, you kind of mentioned this. I picked Bob Chapek, who's the former Disney CEO. He was Iger's handpicked successor 3 years ago. Then the pandemic hit, which shut down the theme parks. But then I think the big mistake was allowing himself to be mau-maued by woke employees into picking a fight with DeSantis over the so-called Don't Say Gay bill. That caused DeSantis to retaliate by threatening the special privileges that Disney enjoys in the state. And then he had Iger undermining him behind the scenes. This was revealed, I think it was in a Wall Street Journal story, that he was grousing to insiders that Chapek was not soliciting his advice and he was undermining confidence in him with the board. And recently Chapek was forced out and Iger was put back in charge.
Fantastic choice for the biggest loser. The Fed trying to play catch up is the worst trend for me, oversteering into the crash. What do you got, Chamath, for the worst trend of 2022?
The worst trend was the continued profligate spending by the federal government. We have record deficits, record debt. And this year, we're ending the year by adding another $1.65 trillion of spending that nobody can seemingly account for. It is truly the Christmas tree of Christmas trees in terms of bills. So we have not gotten religion yet around being measured in how we spend money.
Good one.
Worst trend, Sachs.
Last year, my worst trend was authoritarianism growing all over the world. And I think that was a pretty decent prediction. This year's worst trend is the government colluding with big tech to engage in censorship. This is how they're going to do the authoritarianism. We talked about it with Schellenberger and Elon, this whole series of revelations known as the Twitter files. We can see this collusion, this cozy relationship between the censors at Twitter and big tech and the bureaucrats at the FBI and DHS and Pentagon. This is a really disturbing dystopian relationship, as we talked about earlier. And, I feel like we spend all this time talking about the authoritarianism in Russia and China. We seem to be obsessed with combating that and going to war with that. But we don't spend enough time talking about this growing authoritarianism at home. The media doesn't seem to want to report on the Twitter files at all. Let's focus on stopping authoritarianism here.
Well said, Friedberg. What's your worst trend of
My
the
worst
year?
trend for 2022 is what I would call interest rate mania. And I think that this is the mania that we've been caught up in on this show, that other people on our thread, people in the business community and the investing community, where everyone's obsession with did the Fed act soon enough or late enough, and that interest rates ultimately drive success or failure with building businesses and making good investments.
All right,
and the truth is, when interest rates go the wrong way, good investments can kind of strengthen their way, can make their way through those environments. Bad investments cannot. Good businesses can make their way through and bad investments cannot. And so I think our mania around the fact that interest rates and the Fed ultimately drove bad outcomes in businesses and investments is a flawed kind of assertion. And we all want to kind of get back to the drunken days where, a low interest rate environment enables us all to be successful and wealthy. And I think that that's kind of changed. So I think it's time for us to get away from the interest rate mania and focus more on solid investing and solid business.
Click the link in the description and make a deposit to claim your free stocks.